Yo guys, welcome back to Stock Talk Insider. Today I want to talk about the Honest company, and I want to deep dive a little bit more into the company than I did in the last two videos. So I'll be going more into detail and adjust it a little bit to the current situation on the market and where we're headed for the coming months, maybe years even. But yeah, having said that, let's just go and straight right in. So the Honest company listed on the NASDAQ. By the way, before we actually begin, this is my position. I hold around 400 stocks of of Honest. I'm sorry. We are down around 28 euros. It's not really a big position actually. It's around 1200 euros. But I want to increase it to around 1,000 shares. That would be nice for the coming gains or on the coming years. So yeah, just to give you an example of what my position is: 400 stocks of Honest at a current price of 3.95, but the price is at this moment at 3.63. So yeah, that's something I wanted to say before we really dive into the company. Company is founded in 2012 and co-created by actress Jessica Alba. The company focuses on safe, sustainable and transparent formulas. Since 2023, Carla Vernon has led the company as CEO, and in June 2025, Curtis Bruce officially stepped in as Chief Financial Officer, and all of those changes have been a really good decision for the company. In 2024, Honest delivered a strong turnaround. Revenue grew 10%, reaching $378 million. Gross margin expanded to 38%, up 900 basis points from the prior year. Fourth quarter revenue hit a record $100 million. This progress reflected Honest's three transformation pillars: brand maximization, margin enhancement, and operating discipline. Talking about the Q2 2025 results, for the second quarter in 2025, revenue was $93.5 million, nearly flat year over year. Gross margin reached 40.4%, an improvement of 210 basis points. Net income came in at $3.9 million compared with a loss of $4.1 million last year. So not really a change in revenue, but a very big change because we are now net profitable. And so going further into those information points, we have the adjusted EBITDA, which was $7.6 million and 8.2% margin. A very critical detail to explain is that tracked general consumption grew 6%, outpacing the overall category, which rose only 2%. At their largest digital partner, consumption surged 26%. On the downside, direct-to-consumer sales through Honest.com declined, and shipments retailers lagged consumption due to timing differences. Taking the balance sheet and cash flow, Honest maintains a healthy balance sheet, about $72 million in cash, no debt outstanding, and that for a market cap of around $450 million is very strong. However, operating cash flow turned negative in Q2 at minus $3.7 million. Inventories also rose to approximately $95 million. This shows profitability is improving, but consistent positive cash flow still needs to be proven and has a little bit of work to it. So having said all of that, we also have an outlook for 2025 based on all of the information we've had already. So management reaffirmed its full year 2025 guidance. Revenue growth between 4 and 6%, which is not really that big, but I'm not investing for the coming 2 years, but for the coming 5 to 6 years, where I predict a very big increase in its growth. Also, 2025 full year guidance of adjusted EBITDA in the range of $27 to $30 million. Key growth drivers: improved product mix and margins, tariff mitigation strategies, retail distribution gains, and continued innovation in diapers, wipes, and personal care products. Of course, with every investment, we have risks to monitor. So there are still risks investors must watch and take care of. So we have the margins remain very sensitive to import tariffs and higher costs, but that will also not be something for always. So that's also something to keep in the back of the mind. Reliance on large retail partners adds volatility, especially with weaker direct-to-consumer sales. Also, inventory buildup and negative cash flow could pressure sentiment, and as a small cap stock, Honest is prone to sharp price swings around earnings or news. A valuation snapshot is at a share price of about $3.60. Honest market cap is roughly $561 million. Still, that's very, very small compared to their revenue on quarter base, and also their amount of cash that they have. So with $72 million in cash and no debt, enterprise value is about $489 million against 2024 revenue of $378 million. This implies an EV to sales multiple of 1.3. The price earnings ratio looks high, but only because profitability is still very recent and earnings remain small. So we have a very big change in the company. So you have to keep in mind that this company was written down as a company that would go bankrupt and would go out of the market. But they made some changes in the board, and that board that is recently proving that they did a very good job on the last 2 years. And just looking alone to the market cap of around $561 million and them doing almost $100 million in revenue per quarter and also having $72 million in cash is a very stable company if you look at 2 years ago. So of course they've stabilized their business, but for growth and to make money in this stock and in this company, you need the company not only to be stable and to be safe, but you need the company to make improvements in growth quarter over quarter. They can miss maybe one quarter sometimes here and there, but for the main part, they need to grow quarter over quarter actually to prove to the market that they are very reliable and that they are just deserving of the value of a higher stock price. So yeah, that's something to watch. So keeping it short, they just need to improve their margins and they need to improve their consistency. And the third one is they need to improve their growth. And coming back on the second point, improving their consistency into the growth. So yeah, that's something I'm talking about if I talk about the Honest company. I do believe in the company in 5 years. It will not stay at $3.6. It will go higher. And I do believe that if you look at the chart and we take the chart of today, I do believe that we can go to around $8 by July, June 2026. And that is if they keep their earnings very steady and growing. But of course, the impact of tariffs can make that a little bit difficult. But again, I do believe that $8 is very able to be in reach of achieving it. So yeah, having said that, thank you for watching. If you have something else to say about the stock, leave it in the comments, and I'll see you later.